Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Hydrogen power has a lot of potential to be a growth engine and a cleaner source of energy for a lot of use cases all around the world. But hydrogen stocks and hydrogen companies have really struggled to make money and find a real footing in the energy market. But I want to cover three companies that are taking a little bit different approaches, even a little bit different technology approaches, and where investors may want to look for the best hydrogen stocks today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I'd like to thank today's sponsor, The Motley Fool. Check out fool.com/ASYM for the top 10 stocks to buy right now from The Motley Fool's stock advisor. Now, in hydrogen, there are really a number of challenges that the industry is going through. One is you got to find use cases for hydrogen. There have been a lot of discussions about potentially using it for transportation. That has not really taken off. There's also backup energy use cases, could potentially power ships with it. So the technology that goes into hydrogen really drives where those use cases are going to be. And that's what really separates the three companies that I'm going to talk about today. Plug Power and Ballard Power Systems are using what's called a proton exchange membrane, or PEM technology. This is the kind of hydrogen technology, hydrogen fuel cell technology that could be used in a vehicle. It's relatively low temperature, and so it's very attractive from that perspective. The challenge is the competing technology, which is a solid oxide technology. That's what Bloom Energy does. So they're selling primarily into backup energy systems like hospital electricity backup. Apple has some of their systems, and then they're looking to develop ships that are powered by hydrogen and all kinds of other larger use cases than things like powering cars or commercial vehicles. So that's really the breakdown of the technology. What I want to get into in this video is what we see from a financial perspective as a result of those technology decisions, because that's ultimately what we're getting as investors is the financial output of those companies. So I'm going to start with probably the most popular company, and that's Plug Power. Now, this chart is quarterly results, so quarterly revenue, quarterly net income, and quarterly gross profit. And what you can see from this chart is that revenue growth has actually been really strong over the last decade. That's not really something that's in question for Plug Power. They have done a great job expanding their potential markets. What they have not done a good job of is actually making money. The most alarming number on this isn't the net income loss of $236 million, which is almost losing $1 for every dollar in revenue that they're generating. The shocking number is that gross profit margin is negative 27%. That means when they make a fuel cell, if they sell it for $1,000, they're losing $272 on that sale. So every dollar of growth actually makes Plug Power less profitable. Now, the story for Plug Power is that that's going to change in the near future, that a lot of these growth markets like electrolyzers are really going to change around the company's fundamentals and their financial performance. But I have been covering this company for more than a decade now, and we have been hearing the same story for a decade. This is not new technology. This is not a new company. It's decades old at this point. And the only thing that we know consistently about Plug Power is that it burns cash, and the way that it finances operations is it sells stock. So it dilutes shareholders with stock sales. It's possible that they turn around and generate profits or positive free cash flow sometime in the future. But we have no evidence today in their financial results that that's anywhere near happening. The negative 27% gross margin is really the surprising number, and that just makes it uninvestable to me. The second company is Ballard Power Systems. This is still about $1 billion company, but you can see from this chart that results have really struggled lately. Quarterly revenue was just $15.3 million last quarter. Net loss was $30 million. That's getting a little bit better, but still just a really bad trend for the company. And gross profit margin is negative. You can see that historically, gross profit margin has been positive. The company's financials have been typically a little bit better than Plug Power, but still just struggling to grow profitably and show the market potential that I think a lot of investors think are there. So we really see the same story from both Plug Power and Ballard Power Systems. A lot of potential, oftentimes a lot of really exciting announcements. At the end of the day, the story is the same. They're losing money. They don't have good margins. And as a result, they end up having to fund operations by either selling debt, or selling more shares and diluting shareholders. The one company that's in a little bit different position is Bloom Energy. This is the company that I think is the one investable stock in hydrogen today. You can see that revenue has grown steadily over the last 10 years, now $300 million in quarterly revenue. Bloom is reporting a net loss, but the net loss of $66 million compared to $300 million in revenue is a much, much better net loss margin. This is what clearly needs to improve in the near future for the company to start to generate positive cash flow, really be a solid investment. And then the other thing to look at on the bottom, gross profit margin, 18.7%. Consistently, Bloom has higher gross profit margins than either Plug or Ballard Power Systems. So generating more revenue, better profit margins, and still reporting a net loss, but not nearly as big of a net loss. What I think is fascinating from a market perspective is Bloom Energy's enterprise value. So the value of the stock plus debt minus cash is about $4 billion. Plug Power is actually worth more. The enterprise value of Plug Power is about $4.5 billion. So again, from an investment perspective, you have a choice between a company with better margins that's trading for less, or a company with negative margins that has no history of reporting positive cash flow or improving its net losses in Plug Power that's actually more expensive. So if you are looking to invest in hydrogen stocks, the one that I would pick today is Bloom Energy. That doesn't mean that this is a safe stock. It's still a very risky industry. We still need to see a lot of these markets where we see a lot of potential, like electrolyzers, like powering ships, like energy storage for utility scale projects. These are really big potential markets. I think Bloom Energy's technology, that solid oxide technology, the more efficiency, and the fact that it doesn't really matter as much that it's a high temperature application, those are great industries for them to serve. But we do need to see Bloom eventually get to profitability. But if it can do that, I think this could be a home run stock and is one that is at least worth putting on your watch list if you're interested in hydrogen and renewable energy. Well, what do you think about these hydrogen stocks? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.